Okay, so you've got some. Have you taken some out for other things?
Yeah, I have, just a little bit. We've bought bits and pieces for a new house that I've been building, so probably got about 20 at the moment, but if I'd need to, I could save up before 30 June.
Okay, so very important question. Always ask where the cash is gone. Most times I've ripped it all out of the company, even though we've told them not to because of Div 7A, to pay off the home or do whatever, and so we know straight away we've got a potential Division 7A problem when it comes to having cash, but that's something we'll look at a bit later. So what we'd say at this point in time, it's okay, well, Susie, there's a few things we've done. I know you're taking your wages out and you're paying your super each quarter, or you should have been paying it each quarter, but let's just assume that we haven't built into the projected profit figures up here the super contributions. So we'll say, right, well, let's make sure that you put, what you can in for super. So we'll whack 20 in there. Sorry, 20,000. So we'll talk about the super that we want to put in. And when you put in negative amounts, tax-paying options, it actually takes it off and reduces it down. So it shows you straight away the effect of that. And then you might have a meal allowance and a travel allowance that, depending on your client's circumstances and various awards and things that they're under, that you can claim. So, for example, if they're doing a travel allowance, if they're travelling around Australia, we're aware that they can claim certain amounts stipulated by the government, that the client might have receipts for some of those as long as they have spent the money, but they mightn't have kept all the receipts, but as long as they don't claim over the travel allowance amount, they're allowed to claim it. So we normally find when we go back and we look at what a client's done, travel-wise, there's extra amounts that can be claimed under travel allowances, so we'll factor those in. Now, just a couple of little bits and pieces here. If we've got a family trust on this side and there's losses over there, depending on whether they've signed family trust election documents and all those sorts of things, we can actually factor in a distribution to the investment trust. So in this case, it's a company, and we can't do that. But let's just say we were talking about a trust on this side. We could do, say, a negative $30,000 distribution on that side, and that gives $30,000 coming into the investment trust on this side. Actually, Susie's done it down the bottom there, 200. Okay, so that's coming out, and that's a tax adjustment going in. So out over there, in over here, and that can mop up any losses, any distributions to nephews or things like that. So obviously, because that's a company, we can't do it at that stage, but there might be some other ways that you can transfer money across from the company to the trust. I'll leave that up to you and your skills as accountants to do that. So at the end of the day, you work through, put whatever tax-paying adjustments. Susie might want to buy a notebook computer at the end of the year and put it in as part of a salary package, an iPad, and things like that. So I'll just put a few of those things. So as you're aware, if it's done as part of a package, out to Susie, we can claim an immediate tax deduction for that. Susie doesn't get the depreciation on it, and the company doesn't either, but we get immediate upfront deduction if it's done as part of a salary package. Obviously, you can claim some GST on that as well. So there's a few things they can do there, and then that's going to bring the tax down. So talking to Susie again, after we've spoken through our tax-paying checklist, there's a few other things that we might do as well. For example, Susie might say, okay, well, look, I can pay some insurance policies. We might talk to Susie about her income protection insurance. Have you got income protection insurance, Susie?
Yeah, I have. You set that up for me last year when I came in for my tax planning meeting, and that's been good.
Okay, so we might look at upping that. Premium might be like $4,500, so that's an immediate tax deduction if we do it in June. Obviously, it takes a bit of time to get the insurance policies through, but that's something while we start talking to clients about tax planning in April, because if we can get some income protection through and things like that, they're normally great upfront tax deductions for clients, and they're covered as well. So by the time we work through our tax-paying checklist, I'll say to Susie, look, Susie, that's all the things we can do. You can't wave a magic wand and get rid of all of your tax, but putting those couple of adjustments there, that's brought it down from about 74 to about 66. So straight away, there's about $6,000 to $7,000 worth of tax planning savings there. How do you feel about that?
I'm very happy, Tim. That's fantastic.
So that means that after the PAYG instalments that you will have paid at the end of March, we'll have about $20,000 to pay, and that'll obviously be due when we lodge your tax return next February. But
so I've got that long.
You've got that time to put that together. Yeah.
Okay. Yep. That's
great.
great.
Okay. And then with the investment trust, depending on their circumstances, if we can funnel some funds through to there, we can make use of those losses. All the losses are carried forward. So moving to the personal side, we'll say, right, well, Susie, well, you've got 90 grand in wages to the end of March. Now it's going to be 120 grand to the end of June. So you've got PAYG instalments coming out, and that's great. Actually, we've done it over here, so I'll go back a step. Income protection insurance we show through the company, but in fact, probably best going through Susie, but she'll claim it back at a high tax rate. So she's already got income protection insurance in there, so that's the best place to put it. We might have some other work-related deductions and other things. So we'll talk to Susie about what she can do, and we'll put it through there. And this will calculate the gross tax payable, Medicare levy, and the balance of any tax payable. So just using these worksheets enables you to play around with the client, factor in some extra deductions, and you'd write down what the tax was beforehand, and after the deductions we'll show what it is. In fact, we might put a little line in here in the new version showing before and after tax planning, so you can see the values straight away on the sheet of what you've done with your client. Okay, so Susie, we've run through your tax planning and we've picked up some good tax deductions there. So what I'll do after this meeting is I'll put this through into a report and send it through and go through it with you to make sure you've got enough time to do it all.
Excellent. So I'll know when I have to have everything done by.
Exactly,
okay.
Yeah.
Now, Tim, I just wanted to talk to you. You mentioned to me once before about some new accounting software that you've been talking to me about, and I'm a bit worried because I really love MYOB and I like the way I do things. What?
Sure. Well, look, let me just load up the Xero site and I'll show you what it's like. You can check this out for yourself, www.xero.com.
I mean, the first thing that worries me is that it's online. Is my information safe?
Look, the same security that they use in Xero is the security that they use on banks.
Okay.
So do you do your online banking with your banks?
Yeah, I
and you pay
do.
your BPay?
Yeah, I admit that.
That's the same sort of security that you use with that. And so just telling everyone on the webinar, what I normally do in this stage, I'll load this up. I'll actually load up the trial version of Xero that I have and just show the client the front screen. And I'll say, hey, look, Susie, this is how Xero works. Your bank feeds automatically come through here and they reconcile it. And
so I don't have to enter this in?
You don't have to enter that in.
Okay.
That saves a lot of time. And then not just that, but we as your accountants can look in this. Instead of you sending the disc out to us every quarter, and then you can't do anything until we send it back. And you know how we send you that list of adjustments?
Yeah.
And then you've got to put through, then you send through the bank statement to us, the bank balance sheet so we can check it. None of that, because we can just jump on, check it, make any adjustments, and we're using the same ledger, the same data set.
Okay.
And what's great is I was able to pull up for other clients using Xero their tax planning amounts and know exactly where they are, so we can give you advice in real time, which is fantastic. So you're paying MYOB, you've got to pay in the renewal fee this year, $600-700. It's $600 a year for Xero, $49 a month, and we'll take you through setting up and then training for it. So it probably takes an hour to set it up, in an hour or two to convert your data, an hour to train, and we'll give you, a fixed price quote on that. But what's great about it is you're not stuck to a computer at your desk. You can use it at home, you can use it on your iPad, wherever you are around the world and see what's going on.
Excellent. Okay. All right. I'll be interested. Can I do that free trial there?
Yeah, look, what we'll do is we'll set something up so you can have a look at it. But the biggest confidence we can give you is that many of our MYOB clients, when we've showed this to them, have said, oh, look, we've really not liked MYOB, and they've only used MYOB because it hasn't been really an alternative. But now here's an alternative which is so much easier. It's simple to use. And what I'll do for everyone on the webinar is I'll actually take Susie through and show her paying a cheque or putting an invoice through. And once they see you do that, I only spend 5 minutes showing them, they think, wow, this is easy. And they've got to experience how easy it is for them to consider moving forward with it. So I say, Susie, so what I like to do is we'd like to get you set up on this from 1st of July.
Okay.
So it's a good changeover point. And then it's going to save a lot of time for you. It's going to mean if you've got any questions in time, you can just pick up the phone and talk to us. We can look at it and fix it up. It means that we can give you better advice as we go throughout the year.
Okay, Tim, it sounds really good. Can I do that trial and have
Yeah,
a chat
so
to
you
you
can
after
log on
that?
and have a play with it,
Yeah,
and we'll
okay.
go from there.
All right, good.
So that's really all we're saying to our clients about Xero, and once we've showed the clients those things, they've been very receptive to it, moving across. We've moved across probably about 50 or 60 of our clients to it at the moment. We're trying to move the rest of them across by 1st of July. Because I don't want to pay for any more subscriptions to Handy Ledger, which is what we're currently using. I want to do everything on Xero, and Xero will give us the ability to do that, especially now they've got the inbuilt payroll and other things like that. Now, you might think here I'm trying to do a sales job on Xero. I'm not. Use whatever software that you want to use. If it's online and can make you and your clients bring you together and work closer together. I just think Xero is the best one by country mile based on the features that are out there. But look, the important thing is talk to your clients, show them the new technology. Clients want to see this new technology. Everyone's buying iPads, so they want to see what can I use these for. And when you can show them how they can manage their business and check out how things are going on an iPad using Xero, and then how you can communicate to your clients by checking out in real time what they're doing and making adjustments, I think that's just fantastic. And as I keep saying, the clients that we've got on it and using it are just blown away by it. So we'll talk about getting onto Xero. The most important thing for everyone in the webinar, open up the Xero screen, show it to your client. When the client sees it, when they can see you enter a check in the dummy client, or doing an invoice, or pulling up a report, or doing a BAS with pressing one button, that's when they start to get the power of it and how it doesn't look clunky and old like Maya, but it's new and fresh. And it really sells itself. Now, if you don't get excited about it, your client won't either. So I'd suggest that you should play with it. Try to set up for your firm, set up for yourself personally, and then see the value behind it. Because if you haven't done it yourself, you're never going to be excited enough to get your client interested in it. Clients like excitement, they like passion, they like to see someone very interested about things. And if you're not, if you're just saying, oh, here's something else, blah, 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 they won't get excited, they won't move. So you've got to see a benefit for your firm. Now, to me, with my accounting firm, with every client I have on Xero, I believe that we will save 40% of the time needed to do year-end financial statements. Now, we'll be charging the same amount to our clients, but that 40% is a huge saving. It makes us more efficient. It means we have a high hourly rate. It means we can talk to our clients about other more important things. Now, getting back to more important things, now, Susie, we've spoken about Xero, but let's just have a look at your other circumstances, because you've said that you've pulled out your cash to use for things for your home. What I like to do is let's spend a few minutes now, we'll get a snapshot of your up-to-date assets and liabilities, because you've got your home loan, and I know you said before you wanted to look at buying an investment property. Let's work out a strategy whereby we can get the money from your business, try and pay off the non-tax deductible debt on your home, but then borrow out using a split loan and then money across to your trust for another property.
Excellent.
Okay, so that's something we need to look at. But even more importantly, we've got this new service called the Life Plan, and that's looking at why you're working. Like, have you sat down with your husband and thought about why you go to work every day and where you're going to be in 10 years' time?
No, I can't say we have.
You see, that most of us don't do that. We just go to work or we just run our business.
I'm working too hard to stop and think about it.
Yeah, exactly. Yeah. So what I want to try and do is we need both your input and your husband's. We need to look at where your assets are right now, your assets and liabilities and your income, and project that out for the next 10 years. And that's what we call a life plan. We normally charge $1,000 plus GST for doing that, okay? And because it's projection, accounting and tax work, it's fully tax deductible for you. What we'll do, though, is show you the next 10 years of your life.
Fantastic.
We can even put a few kids in if you want. Things
what about
like
wrinkles?
Yeah, well, hopefully less stress, unless you get the Botox route. But anyway, how much does that cost? We'll factor some of those medical costs in. But we'll show you the next 10 years of your life. And then we'll say, right, are you happy with where this ends up in 10 years' time, your net asset position? Because what we could do is then tweak a few things, play with a few different super contributions. So should you set up a self-managed fund and do a property in there? Should you buy another property in your trust name or in your personal name? All those sorts of things. Should you start up a share investment plan? And let's do 3 or 4 different options. And the life plan will show you the outcome of each of those options in 10 years' time.
Okay.
And then you'll be able to work out what decisions you need to make now to give you a better future in 10 years.
Okay.
How's that sound?
Yeah, it sounds like something I'd like to do. So do I do that today or another appointment?
Well, what we'll do is I'll just get your basic asset and liability position now, because I'll come back to you about your loans. If there's anything different, we can go with that. And then we'll start work on the life plan. We need about just a week to put the initial information together. Then we'll get you in for probably a 1 to 1.5 hour meeting where we'll go through the strategies and play with them. And then we'll be able to finish the report and give it to you. And from there, I think you'll see there's quite a few things that you can do from a financial planning perspective that we really need to get started on. The sooner you get started on it, means you're going to get a better result in 10 years' time.